Let's get straight to today's market action, though. Joining me is Jose Rasco, HSBC Global Private Banking CIO, and Brenda Vingiello. She's Hill Global Advisors CIO, as well as a CNBC contributor. We've also got CNBC's Megan Casella, who's tracking, of course, the latest out of D.C. on those tariffs. Let me start with you, if I can, Jose. Just give me a sense in terms of the action today, your expectations coming in. Of course, on Saturday, I think a lot of people were very bullish about what we might have seen. Then we got sort of a bit of a reversal on Sunday, given we're told, well, yeah, we're exempting some tariffs on Apple and the like, but of course, then we're going to reinstate others under national security concerns. So what do you make of the action today in response to those headlines?
Well, and then there was the headline, David, about autos, right? So in auto parts.
Yes.
So it's all
later
over
in the day,
and, yeah, and even if you have a direct target that you're shooting for at the end of the day, the strategy, the whipsawing of the markets is what's dangerous. And from our perspective, it makes it hard to be very constructive on U.S. markets, given that volatility in just political planning. And more, if you look at the business environment, how can you plan for the next 3, 4, 5 years in an environment where you don't know what the rules of the road are? So that's really one of the things that's beginning to concern us. It's not necessarily the tariffs. We still are hopeful Trump administration is going to use them as a tactical tool to exert other companies to give us better bilateral trade agreements. But even if they accomplish that, they could kill the goose that laid the golden egg, which is the secular trend of the tech revolution, and the reindustrialization of the U.S. requires capital, and we need stability in planning to get that done.
No doubt. And I hear it from many CEOs as well, certainly at least when I'm speaking to them on the phone, not necessarily on television. They're concerned, and they're sort of, as you say, kind of in a wait-and-see mode. So what impact do you think that has? When are we going to start really seeing companies remove guidance, for example? And what does that mean overall for your view sort of the macro environment at this point?
Me?
Yeah, you.
Yeah, okay, I'm sorry.
That's okay.
Well, I think we've already downgraded the U.S. 2 or 3 times this year. We're at neutral. And definitely, if you look at the 10.5% numbers we're getting from FactSet on earnings, we think those will be revised down. We don't think they'll be revised materially lower, because we still are hopeful that the Trump tariff scenario will not be as adverse as Waller pointed out this morning. We are hopeful it's not 25% recession, that whole scenario. We can avert that. And if we can avert that, you will get some downgrade in earnings. But at the end of the day, you still have a functioning economy. And if you get the second half of this, which is lower tax rates on the corporate and household side, and you get some sort of deregulation, it could be enough to keep us afloat, especially when the Fed put does come into play. June might be tough, but we expect 3 rate cuts this year.
You're still looking for 3, huh? Yeah, June may be tough. Yeah. Brenda, let me come to you. And, I think the expectation coming in this morning, even with some of the walkbacks of Sunday, was that we'd see tech have a pretty strong bid. Apple does end up 2%, but NVIDIA's down. Amazon, Microsoft, none of them really showing much gains this morning. Does that concern you at all? Excuse me, this afternoon. I'm thinking I'm in the morning still.
Yeah, I think, it's not surprising. This has been a wild ride over the last several weeks with a lot of confusion, even intraday changes. So not surprising. But I think in our view, it's good that at least we have a postponement of some of the tariffs, because I think it will provide time to really fine tune the focus rather than having these blanket tariffs across the board. And that's, if you look back at what Trump did during his first term, it was much more, the tariff implementation was much more targeted. And we're hopeful that that will be the same this time around, because I don't think the end goal is to hurt U.S. companies and harm the economy. And so when we think about how we've taken action in our portfolios, we've done it in a way that has been incremental, but we have been adding when the market has been down. But we've done it in an incremental way with a long-term focus, knowing that we're not sure we've seen the bottom yet. I'm hopeful that we have. But we do think that on days like, Tuesday of last week, that was an interesting day, and one that we felt was, for long-term holders, was a good entry point to add a little bit more exposure to the equity market.